If you've ever asked, what's the best mortgage rate, you're not alone. But the real question is, what makes up a mortgage rate? Let me break it down in simple terms. Mortgage rates are tied to the market performance of mortgage-backed securities, or MBS, which is a type of bond. If investors are buying a lot of these bonds, mortgage rates go down. If demand for the bonds drops, mortgage rates go up. Look at this mortgage-backed security chart from the past 5 years. You can see that in 2020 and 2021, MBS demand was high and mortgage rates hit historic lows. But in recent years, MBS prices have dropped, driving rates higher. A common misconception is that the Fed dictates mortgage rates. The Federal Reserve influences mortgage rates but doesn't set them directly. They control the Fed funds rate, which is simply the interest rate that banks charge each other to borrow money overnight. Think of it like the wholesale price of money for banks. When it's low, borrowing from the banks for things like autos is cheaper, but it also means that the interest you're making on your savings account is lower. When the Fed funds rate is high, the opposite is true. The Fed can lower rates to stimulate the economy, but during the COVID crisis, the rate was already near zero. So to stimulate the economy, one of the things they did was bought billions of dollars of mortgage-backed securities. That's why mortgage rates were so low in 2020 and 2021. During that time, the stimulus checks combined with the supply chain issues, etc., increased inflation. Since a 30-year mortgage is a long-term investment, inflation becomes a key factor because it reduces the value of money over time. So when inflation rises, mortgage rates follow. Add to that, the Fed stopped their mortgage-backed security purchases, leading to less demand, pushing rates up further. The Fed will try to curb inflation by raising the Fed funds rate, and their increases and cuts over the last couple of years have had an additional impact on the bond market. So yes, I understand, mortgage rates are higher than in 2021, but I do want to put it into a little bit of perspective. Historically speaking, they aren't all that bad. I'm glad I wasn't trying to buy a house in the 80s. The last thing I want you to understand is that when you see a posted rate online or in an ad, you need to read the fine print. There's not a magic interest rate for everybody each day. When they post rates, like in this example, they are generally at a 75% loan to value. So the person would be putting a down payment of 25%. And 780 FICO, which is excellent credit. Ads will oftentimes also have built-in points, which is a topic I'll save for another video. Your mortgage rate is just one piece of the puzzle. The real key is having the right mortgage strategy for your situation. If you're buying, refinancing, or just want to understand your options, let's talk. Reach out and we'll create a strategy tailored to you.